Our next speaker is Jovan Milovanovic, who is the co-founder and the software engineer at FinSpot, where he has developed a software for early financing of invoices of business entities, which is the first such platform in Serbia and in this part of the world. During the development of the company, they also issued the first digital token in Serbia, which is a very interesting thing. He graduated both engineering and did a master's in quantitative finance. And he'll talk about bank statements, data analysis, and how to utilize a mountain of daily generated transactions.
Thank you. Okay. Hello, everyone. Thank you for joining my talk. I would like to talk to you about today about our new thing that we are developing, and we really hope to change the way small and medium businesses are actually assessed. And this is based on the daily generated transaction data between these SMEs. So a little bit about FinSpot. So we are basically a fintech lender. So we enable access to finance for small and medium-sized businesses. Actually, this segment of the market that is very well underserved in Serbia as well as in the region, but also in Europe, in more developed countries. And we do that by through invoice factoring, or we essentially finance their undue invoices. So instead of a business waiting to get paid 90 days, they can get paid today and pay a small fee for that. We are now operational for 3 years. We have financed around 18 million euros in invoices so far. That translates to roughly 150 clients, 4,000 invoices. So we are pretty familiar with this market segment. We also develop because we have an internal engineering department, we develop other fintech products. But the main point of this slide is to tell you that we do assess a lot of companies on a daily basis. So this is kind of the core of our business. And now, let me walk you through the story of how we actually got to think about utilizing bank statement data or transactional data in assessing companies. So we started operating in December 2020, late 2020. A couple of months, years from that point onwards, we built a solid portfolio of 120 clients, millions of euros financed, etc. We improved technology drastically. We created a lot of pretty advanced credit risk models. So we are pretty comfortable in this position of lending to a small company because we are confident that we can assess them properly. Now, in September last year, one client that was perfect on paper, they go bust, they default. Not only that they defaulted with us, they were also exposed, a lot of very big banks were exposed towards this client. So banks lose roughly 1.5 million euros, and we lose around 40,000 euros. And this company was actually, if you look at their financials, their balance sheets, income statement, whatever derived variable you create from that, they were perfect client, which also this number speaks to that. So roughly a month later, we decided to do a deep dive, what really happened here, and we decided this company entered into problems months before it was reflected in our transaction. And the main point is that no lender detected it. So what specifically happened with this company is that they lost their main supplier, and they started, slowly running into kind of like a ripple effect and running into one problem after another, and it was slowly being reflected. It would be reflected in their balance sheets in the end of the year, but it could not be detected at that point in time. So why did that happen? It happened. Why nobody actually could identify this moment is because traditional financial reporting simply more often than not does not fit the requirements for assessing a small and medium-sized companies. A couple of reasons for that. All the data that you look at the end of the year, even when you ask your clients to provide you with trial balances or some updated data, it basically represents a financial state at the moment in time. What we should gravitate towards is the real-time insight. These companies are actually in a rapidly changing environment. So big companies are usually, as we all know, much more inert. So what was true 6 months ago will probably be true today, or change to a small degree. But for small and medium companies, it can be a completely different picture. And there is also, of course, room for manipulation in these year-end financials. So you can hide some things cannot be visible that happen throughout the year, etc. This essentially leads to two different things. First one is number of defaults with this market segment, which are, I argue, preventable. Not all of them, but some of them. And the second thing is are missed opportunities. So because the lenders are afraid of these occurrences, they don't want to get into the sector at all. So you have this number by the World Bank where they say it's SME financing gap globally $4.5 trillion, which is a huge number. And just in our region, so Serbia and neighboring countries, is around 110 billion. So what we believe can help this case to better assess companies and expose more towards them is precisely bank statement analysis. And what we mean by that is the transaction of a company generated on a daily basis, so number of those transactions. So you have your standard data, who sent money to whom, when, on what basis. And we argue that if you have all this data for a single company, you basically know everything about them. This is why you will probably like the name of the product that we're coming up with this. So they also, bank statements or these daily transactions possess really nice features. So they are almost real time, so not real time, but almost as close as it can get. They're globally available, so in any country, all the businesses that operate in that country generate these daily transactions, and it is stored somewhere. And they are consistent. So meaning that whatever different format you take, you can always find out who made the payment to whom, what was the amount, on what basis, and when did the payment happen. And with these features, and with the next thing, and that is that banks and other financial intermediaries actually sit on a mountain of this data, we believe we can really change this approach on assessing small and medium-sized companies. This is why we create Heartbeat. So it's a tool that parses bank statement data and produces real-time insight into the economic health of a company. We organize it in 4 different layers. First one is the processing or parsing of this raw statement data. The second layer is to map this raw data as closely as possible to the balance sheets and income statement at any given point in time, basically subject to what is the latest date you have the data for. The third layer is creation or customization of the heuristic-based indicators. We will talk about this a little bit later. And of course, when you have a vast majority of data in one economy or in one bank or for one client, you can apply some statistical machine learning models to identify new patterns or make some predictions that we will see. So as you can probably imagine, the hardest part of all of this is the layer 1, so data collection and processing. The goal of this layer is to simply parse the data and store it in a standardized format. But there are a couple of different verticals that affect the success of this data processing and storage in this case. So first you have the sources. What we currently do and how we actually began when we started developing the product was the manual input. So you actually talk to your client and ask them to send you all of the data in XML or something like that. Then you have an option to go with the bank where you integrate with them and they provide you with lots of data, or through a financial intermediary. Or if you're entering into a European Union, you have open banking. So you have the different standards, different formats that you need to pay attention to, and different problems that each of them bring. The second thing is where you're based and where is your data coming from. So in Serbia and the neighboring countries, the picture is much more different than the EU, both in terms of data regulation and accessibility, how you need to process the data, what you can do with it, and what you actually get from the data provider. And when you mix any of these individual features of these two, let's say, verticals, you basically arrive to two main challenges. First one is transaction classification, and the second one is having access to all of the bank accounts for a single company that you're analyzing. Regarding the first one, transaction classification, so in Serbia we are a bit spoiled with this because each transaction that's being made in Serbia is essentially already classified by the payment code, so it's not like perfect classification, but it's pretty good. And when we designed the product for the European market, we actually thought about using this payment code from Serbia as kind of like somebody already labeled our data, and we can apply the same logic to the European data where the payment codes are unavailable. And also we are exploring LLMs as a tool to processing these payment descriptions and classification of the data itself. The second main thing is the access to all bank accounts. So if you're analyzing a company, you would ideally like to have all of their transaction data in one place. So this is true also for the point where you're integrating with a bank, which we are currently exploring. And it doesn't make sense to do it if the company that is in your data set is not the majority, the major client of that bank which we're talking to. So you need to have all of the bank accounts for the company in order to gain some insight. As it comes to other layers, we basically identified the following features once this layer one is taken care of. So as I mentioned earlier, so mapping to balance sheet and income statement. This is what the bank we are talking to is actually finding very useful and interesting. Ideally, you can validate the accuracy of the previous year's financial, potentially identify some mismatch. You can reconstruct a financial statement up to the current date, and you can also make some projections towards the end of the year. The second thing is the indicator analysis. This is so far the greatest feature we have. These are purely heuristic-based indicators. So things that we have found throughout our lending experience and also that we received from some of the banks that indicate some bad behavior or some potential problem with the company. So you have different types of these indicators ranging from financial, where, you know, strictly income outcome, do they have some loans? Very interesting one, non-bank loans. These are the loans that you cannot, for example, usage of a factoring. You cannot identify that in the year-end financials. But you can see it through the bank statement analysis. The second one, group tidiness. So, do they pay their salaries on time? Do they pay their utility bills on time? Is there a change in this dynamics? And the third one, the third big one is the behavior one. So anything irregular that you would probably see in a transaction. So do they make frequent transactions between the related parties, which is more often than not at least a yellow flag? Do they have a lot of round payments? So usually invoices that they're paying shouldn't be, you know, with a round number. Did they change? Very interesting one. Did they change a bank? Did they move their business from a well-respected big bank to a smaller bank where they could probably have a little wiggle room, things like that. So you can basically add these indicators on top of this layer that we have built, and, you know, look at anything that you're interested in, basically. And the third one, when you have a lot of data underlying, you can make two things with the machine learning algorithms. You can make default predictions better than the one that you currently have with your existing models, and you can discover new patterns and causalities that you wouldn't ideally could catch with a human eye. So ideally, you can generate a new indicator that you would input it into your layer 3. So this is what we're working on currently in terms of data access and developing these algorithms. When it comes to applications, so two big ones and one smaller one, as I see it. So first one is the more accurate assessment of the client. So you can, identify their true cash flow pattern. Ideally, you can predict defaults, identify their debt servicing capabilities, so how much you can expose towards them. The second one, and I really like this one, is when you have a really deep understanding of the company's financial position, so their true cash flow and what is happening from all aspects in that company, you can really make well-timed loan suggestion with the amount that they actually find useful. So these two things you can do when you have a lot of data for that company. And of course, the obvious one is the identification of some fraudulent or suspicious transactions and diving into that vertical as well. When it comes to distribution, we see it as a two-way option. So first one, we are working on deploying it as a purely SaaS platform. So think of it as you have a company, you want to work with somebody else. You would ideally go to the platform and say, okay, I want to work with this company, what can you tell me about them? With their consent, of course, and you would get some kind of a report. And the other one, the more easy to implement one, is to sell it separately to financial institutions, which are also working on. And there you have three options. Essentially, you have large banks, large financial institutions, where they have lots of in-house data, and you deploy on-premise instances. You have very interesting one, financial intermediaries that are connected to many different banks. With this case, you're covering this problem with not having data from all of the banks for a single client. And you have other fintech lenders that are similar to us, but they're mainly based in Europe. We have, so far, we are using it daily in FinSpot, so we are testing all kinds of possibilities with our clients, and I can only say that we are our best customers so far. There is two ongoing workshops with the banks, and of course, when you talk to a bank, they always want something custom-made. So we are working on that, but they have something that we truly need, which is data. And we have secured the funding for the next 8 months for developing solely developing this product. Where are we looking to go in the next couple of months is to secure a large amount of data. What we discovered very early on is when you work with one bank, they usually tend to stick to a certain type of client. So even if you have all of their data, you're essentially mapping for a single type of client or a group of clients. But this is why you ideally want to work with the financial intermediary and tackle basically multiple problems at once. And we want to push our software SaaS platform live. We are working to deploy it to Poland in the coming months. That will be all. I would be happy to answer any of your questions, and thank you for your attention.
Hi, thanks for the presentation. Quick question, so how can you identify when the client changes the bank?
Well, you can identify it in Serbia, and you can also identify it in Europe, but it's a different pattern. So the way you identify it in Serbia is you have, because all of the bank accounts of all of the entities in Serbia are public, and you know which bank, with which bank this company has accounts. So when they move their daily turnover from one type of account, then you identify a switch in a bank, basically.
Okay, but assuming that the client already has open accounts in both banks, can you also identify when the money significantly moved from one bank to the other?
Yeah, of course, of course. I should say that you can identify it up to the point where you have the data for, right? So if, for example, you have the data up until today, you will see it if it happened. Of course, this does not mean that you will be able to track afterwards unless you are attached to the sources of this data for both banks. So this is why I said the option with financial intermediaries is the best one. So think of payment providers, or something like that.
Oh, I see. So basically, in the transaction data itself, you have the destination client, so that's why you know where it's going. But you cannot track, let's say, 2 other banks where the money is moving. Only if it's going from the other bank to you, or from you to the other bank.
If you have data only for that bank account, for that bank, then yes.
Thanks.
Have you tried to use data from CEF, from Ministry of Finance?
Yeah, we are already integrated with CEF, but not in this context. But we will attach it, because you're actually. I didn't want to put that on slides but this is actually a great point. When you can track all of the accounts receivables and payables, then you can really follow the money for that company. But the reason why we are slightly reluctant to do that right now is because we don't want to get strictly attached to the Serbian ecosystem. So CEF is not available in more countries than it is available right now. So if you're, build a lot of tools and spend a lot of time building something strictly for Serbia, then it's much harder for you to.
So
but it's a great case.
So you managed to take data on transactional level for any entity from CEF or not? You have data on transactional level from CEF?
No, from CEF you can only get their invoices.
Okay.
Yeah, right.
Yeah. Thanks.
I think. Oh, there is no.
Thank you for the speech. It was really interesting for us. And maybe a question from the other side of, actually, we should be your customer, but if we wanted to do something like this, can you tell us what is the mix of the people or the skill, or the skill of the people that are working on a project like this? Because typically I understand, or actually, in our organization is like, okay, data scientists and IT guys and some ETL programmer, but in my eyes, or actually in our eyes, it's really important to have analysts that actually understand the domain. So typically like financial analysts working on a project like this also.
Yeah, you're exactly right. So we have, in-house, we have mostly software engineering people. We have very close ties to a consulting company. That's their main job is producing statistical models for banks, and it's kind of like our sister company. And they're the guys that are coming up with and understanding the data behind the transactions, right? So I would definitely agree with you that you need to have somebody that understands the domain that they're inspecting.
Having the deep insight, so actually you are able to provide them the data, you are able to give them models, but you actually don't have the understanding of what the data is showing. So you have to have the really tight connection with them.
Sorry, I didn't get with the customer or with?
No, like in the project. If you're the IT guy, you're having all these. We're calling them big data teams. So actually, you're having a big data team, but you definitely need the customer who is, in our case, it would be some risk department or someone. In your case, it's the sister company having the deeper knowledge in analytics of financial attributes or indicators.
Yes, exactly. And you couldn't develop something like this without having somebody who has a lot of experience in the field, but not just in finance in general, or maybe they did some underwriting here and there, but to, really had experience in data analysis and data modeling, but in financial domain.
In financial.
Because as you already know, I'm sure there are a lot of specifics when dealing with financial data, beginning with that is usually time series, and there are a lot of, hidden things that you should be looking for and some things that you should be ignoring. So I guess as in any other case, but financial data is very specific.
Definitely. My colleagues, they say that the devil is hidden in the details, so definitely.
Always.
Thank you.
Thank you.
Any more questions? We still have like a few minutes. If not, like a round of applause.